Hello. All right, well, let's do this. I'm going to go ahead and get started, and then I'm sure Reid is on his way. I apologize for the delay. Thank you for being here today. We are here to, there he is. We are here to demonstrate a first-time homebuyer seminar so that you have an idea of what's covered in it.
Sound right.
Huh? What? Are you good, Reid? Okay, he's figuring it out.
Hey,
There he is. Okay, so it's all about knowing what needs to be covered, how you cover it, and the relationships and the leverage that you have. The most important thing that I want you guys to take away from this is you don't have to know everything about doing a first-time homebuyer seminar. You just need to have good alliances with people that can do them with you and partner together. So we're going to demonstrate what that might look like for you. What I'd love for you guys to do is to play along like you were first-time home buyers with questions, and then also keep notes of some questions that you had for us, and afterwards then we'll kind of debrief it and then discuss what questions that you had about facilitating it. Make sense? Anything that is specific that you want to make sure that we cover or talk about in today's session before we get started? Going once, going twice. Okay. All right. Well then, welcome today to our first time homebuyer seminar. We're so excited to have you here. I know the thought of buying your first home is both exciting and scary at the same time. So today our focus is to get rid of a lot of those fears and help you understand the process better and know what are the steps that you need to take in order for us to get you into your first home. I'm joined today with Reid Clark from Silverton Mortgage, and we're so excited to have him here to go over the process of applications and mortgages and understanding a little bit more about the money piece. And then we'll also be talking about the sales process and what that looks like. So Reid, why don't you go ahead and take it away?
well, hey guys, it's great to be here with you. Appreciate the opportunity to do this with you. And it's an exciting time and probably a fearful time, a little bit of trepidation probably for most folks as they think about buying their first home. But I want to assure you that although there are a lot of moving parts, you have chosen the right realtor to help you with. Now guys, you know, we're doing this as if you're the home buyers, and Julianne has invited you to her her first time home buyer seminar. So that's the perspective I'm coming from. So I'm going to be saying something like this. So I've done business with Julianne for a long time. We've helped a lot of people achieve their goals as they are finding and financing a new home. So I want you to be able to take a deep breath at the end of this course and just relax and realize, you know what, I have the right people that are helping me. There's no question that I can come up with that they're not going to be able to help me with. And I can be at peace because I know it's going to go well. It'll give me a second. I want to turn a better light on. Okay. So what I would do at this point is I'm going to bring up, I'm going to share my screen.
Okay. The wonders of technology.
Yeah. So what do you guys see right now?
Yeah, we can see it. You don't
You
have
see my PowerPoint?
Yeah. Are you going to put it in slideshow mode?
Yep.
Okay.
Okay.
There you go.
So again, just a quick blurb about me because that's not the important part here. The important part is giving you guys the information. My name is Reid Clark. I work with Silverton Mortgage. I've been in the mortgage business for 15 years. I've helped hundreds of people in various different scenarios achieve their goals and in the financing part of buying their home. So you can trust me. You can get me on the telephone. You can ask any questions. Probably most of what you might come up with, I've seen before, and I'll be able to help you. And one of my real goals is that as you go through the process, there's never any uncertainty on your part. Because from my perspective, if a client feels like they can't ask a question or they're nervous or think they have a stupid question, it lets uncertainty build inside of them. And that's just not where we want to be as we're going through a real estate transaction.
Amen.
My goal and Julianne's goal is for you to have every question that pops in your mind answered so that you are relaxed and you're confident. Because human nature is, if there's uncertainty, you start getting fearful. Our mind goes to the worst, thinks the worst. So we don't ever want that to happen. So anytime you have a question, please feel free to ask.
Mm-hmm.
All right. So the first question is, the first thought is that you want to buy a house. Where do I start? Now, in our country, buying a home probably is easier than almost any other country in the world. When I think about the opportunities and the people in certain circumstances that in other countries they would never be able to buy a house, but our government and the lending institutions have worked in a way that I would say that most folks who want to buy a house are able to get financing. Now, right now, that's a little bit tighter than it has been, and that's because of the current the COVID pandemic environment. The banks have gotten a little bit scared. Money has tightened up a little bit. Guidelines have tightened up, but you'll see that loosen up as we get through the COVID thing. But I would say that for the most part, folks that need to buy a house or want to buy a house, most of them can still get financing. We'll talk about some of those guidelines in just a few minutes. So the first thing you need to do is you need to find a real estate agent that you can trust. Now, from my perspective, one of the best ways to find a real estate agent is to ask friends and ask family. If they've had a great experience with a real estate agent, then you can take confidence that that agent is going to serve you well. You may want to interview more than one. Personally, I don't think that's necessary. For example, let's say if I was buying my first house and my best friend had just purchased a house and he is ranting and raving about the great job that his real estate agent did for him, and he's given specifics like availability, answering questions, being professional, negotiating the contract, then that's an agent that I would want to use too. I don't know that in that case I really need to go talk to 2 or 3 real estate agents, because if you've got one, you've got a great recommendation and you've met with that realtor and you feel comfortable, then I think that's the realtor you should use. I would probably ask a couple of questions about the realtor, like how long have you been in business? How many transactions have you done? But again, there are good realtors who are new in the business. So I think you can be confident if you have a great referral from a friend or relative.
And I think, Reid, that you're right. I mean, when it comes to referrals or past clients, I know that mine is like close to 90%. So people appreciate the work that I've done and use me again and refer others. So that shows my commitment to customer service and excellence, that people come back time and time again. Thank you for that.
Yeah, and I'll say this too, just switching out of this mode for a minute back to talk to the realtors. If you tell a potential client that 95% of my business comes from referrals, that says a lot. And for Julianne, for example, that's where all her business comes from. She doesn't buy leads. She doesn't do that. I don't either. It all comes from referrals. That means that we've done a good enough job for people in the past that they keep referring us. And that's a place where you can build confidence. The second thing is you need to go ahead and get pre-approved for a lender. I think one of the worst things that can ever happen is for a potential home buyer to go out and fall in love with their dream house and then find out they can't get the financing to buy it. First of all, you've got the emotional heartache from that, but also too, just the wasted time on your part and the realtor's part. So once very early in the process, you need to get pre-approved. Now, I would recommend the same strategy on selecting a lender that you use on selecting a realtor, a referral from a friend or relative, or a referral from your real estate agent. The one thing about a real estate agent is they're going to give you a good lender. They're going to refer you to a good lender, because here's the deal. Nobody achieves their goals until we get to the closing table. You aren't able to buy your house. The realtor doesn't earn their paycheck. The lender doesn't earn their paycheck. So your realtor is going to refer to you a lender who they know will take good care of you. So that's important, and that's the second step.
Absolutely. And can I just say something about that, Reid?
Mm-hmm.
There are a lot of lenders out there. There's a lot of things that you see on TV. There's a lot on social media. What you need to know is it is critical to find somebody that you trust and that works well with the closing attorney and with the agent. I have unfortunately had multiple situations where the buyer did not choose our preferred lenders, and it was absolute nightmares where we were delayed sometimes a month, 45 days, up to 2 months because the lender wasn't on time with the others. And you want somebody that takes this very seriously, just like we do, because there's a lot of time frames, and we want to make sure that we meet those time frames. And when we say we get you closed, that we get you closed. So I highly recommend picking a lender that we all trust and that we've used in the past.
Yeah, and I would say that has always been true in real estate, that the lender makes a huge difference. I would say right now it's even more so than ever, because there's so many people, so many loans going through the lender's systems right now, that you've got to be with a lender that is really on top of things, is going to get you to the closing table on time. So part of that process with your lender is to find out your price range. Now, personally, what I want to do is I have people call me and they'll say, Reid, can you tell me how much house I can afford? And so I engage them in a conversation. But then I try to turn the conversation just a little bit to say, rather than let's thinking about starting with the price of the house, let's talk about your comfort level. What is a monthly payment that you feel like you're comfortable level? What's your high end, and where would you really like to be? So they come and they say, well, we feel like that we'd really like to be at $1,800 a month. We could go to $2,000, but we'd like to be at $1,800 a month. I say, great. Well, let me ask you this. What kind of property are you looking for? Are you looking for a single family residence or a townhouse or a condo? And sometimes they'll say, well, I don't really know. I could go with any one of those. I said, well, the reason I'm asking is because a condominium and a townhouse is going to have HOA dues that are going to be higher. So that's going to push your purchase price a little bit lower than where we would be. And they go, oh, well, really, we'd like to find a single family residence. Great. Okay, so for $1,800 a month on a single family residence, let me ask you this. How much money do you want to have in this transaction? At the end of the day, when you've moved into the house, how much money do you want to have spent on this transaction? And they say, we've got $30,000, and that's the amount of money. That won't wipe us out. We'll have a little bit of savings, but we want to use $30,000. So then I'm going to be able to back into the purchase price and say, okay, if you buy a house at this purchase price and you use your $30,000 for the transaction, part of that's going to go to down payment, some of it's going to go to closing costs. This is the purchase price of the house you can buy, and this is about what I estimate your monthly payment would be. And I think that helps people a lot. And that's what I would do with you as a home buyer, is try to help you not look at this pie in the sky number like, hey, I've seen houses that are $400,000. That's what I want. And then you find out, oh my goodness, I can't afford that payment. That's not helpful.
Or a lender that says, oh, well, you're qualified up to $500,000, not thinking about how much that's going to be monthly. So we need to look at the whole picture, not just a number out of the sky, to have a complete picture to be able to get you the right solution.
Absolutely. I mean, it's like we say, people have champagne taste and a Budweiser budget, right? I mean, that's a little bit of a different thing. We want to make sure that we're helping people make a good, a wise, and a comfortable decision. Because when they walk away from that closing table and they get to the end of the first of the next month or the month after that, and they have to write that check, so to speak, for the payment, we want that to be a comfortable place, and then instead of that oh crap moment where they're not comfortable with that. So
exactly.
And then we're going to lay out an estimated timeline. Some of that is a bit arbitrary because we don't know how long it's going to take you to find a house. Now, I will tell you this, Mr. and Mrs. Prospective Homebuyer. We need to have all these details figured out. you need to have a sit down with Julianne and let her do her buyer consultation to find out what kind of house and what area is really going to make you happy. So you don't waste a lot of time. And the reason I say that is because the inventory right now in our area is incredibly tight. So here's what that means. What is called a balanced market, that means where there's a equal number of houses for sale and people looking for houses, is about a 6-month supply of inventory. That's what's called a balanced market. If it's less than that, the market is really tight. So where we are right now is somewhere between 2 and 3 months inventory. That means the market is really tight. That means there's a lot more buyers than there are houses on the market. So Julianne's got to zero in on your target house and houses, and you've got to go see them and you've got to be ready. Now, this sounds like it's being pushy, and I don't want you to interpret it that way. This is experience telling you that I have seen in the last couple years and more than ever in the last 4 or 5 months, people missing out on houses because they want to think about it. I want you to think about it. Julianne wants you to think about it. We want you to be comfortable with the house that you buy, but you're going to have to be a little more decisive now than you might at other times in the market. A friend of mine said a few years back, he said, when the market's tight, he said, if you want to sleep on it, you won't sleep in it. So that's just the way the market is right now. If you and Julianne go and you find a house that meets 90% of your goals and you think you could see yourself living in it, you probably need to be ready to make an offer. Julianne, I'll let you comment on that.
Right. So we do have some things that are in place that will help you to have a little bit of time to make sure you're making a wise decision. So once we put an offer in and it's been accepted and we are under contract, right? We have a binding contract. There'll be a period of time that's called due diligence. And that's your opportunity to do your inspections and to make sure that everything about the home is as you expect it to be. During that time, if it just doesn't feel right, we do have the ability for you to walk away and to get your earnest money back in most instances. So I just want you to know that it's going to feel rushed sometimes, and at the same time, we do have opportunities for you to make decisions along the way. And we'll talk more about that during our buyer consultation, okay?
Yeah.
I also want to let you know, as far as timeline goes, all of you are renters. You've never owned a home before. So you may be worried about the overlap of money. The good news is you pay your rent ahead of time. So you pay it at the first of the month usually, okay? Mortgage is paid in arrears. So even if we bought a home, let's say today in August, your first payment is not going to be due until October 1st. Right. So we have that 30-day window that really helps us when it comes to our strategy on how we're moving forward. So I just wanted to mention that as well. Yeah,
very important. And that is even as I say those things that I said, to try to establish a little bit of a sense of urgency and seriousness about making an offer. Do understand that there are you've got several things in your corner to protect you. Number one, you've got Julianne. She's watching out for you. Number two, I'm going to be watching out for you. And number three, when you write a contract, there are 3 contingency periods in the contract that protect you at different phases, so that you're gonna know what the decision-making points are in your contract. You're not going to sign your name away and then it's like jumping on a slide. You're going to the end no matter what. You do have protection. So I want you to be comfortable in that. And then, some people say, well, I don't need a real estate agent. I can go out and find a house. I can go on Zillow. Well, I'll tell you what happens when you go on Zillow. Guess what happens? You get called by a real estate agent and multiple real estate agents. So I want you to know that you do need a real estate agent. And this slide actually is not supposed to be in the presentation. So you guys are seeing this. This is what I would say to your clients if we're doing it. Your real estate agent knows the area in which you want to buy. Julianne has been serving clients in this area for how many years, Julianne?
This is my 8th year.
Okay.
Mm-hmm.
So maybe I would know that ahead of time and
You would
probably,
know that ahead of time.
yeah.
Yep.
So this is Julianne's 8th year, and she's served hundreds of clients in our area. Now, primarily Julianne's area is going to be this northern arc of Atlanta, but then she also has connections with real estate agents in other areas. So like if you're going to need to buy, over on the east side of Atlanta, Julianne knows a ton of folks and she can refer you to a good agent. But you want to deal with an agent who knows that area the best. A buyer's agent is there to serve you. They are not there to help the seller. They're not there to help anybody else. Their goal is to help you find the house that's going to be the best one for you and your family. And you need somebody in your corner. And part of that,
Georgia is a buyer beware state, which means, if something's wrong and you purchase it anyway, well, shame on you. That's right. So you need somebody to protect you. Otherwise, everybody that's talking to you represents the seller.
Right. And an aspect of that, to tell you how seriously the state of Georgia takes it, is that there's actually an agreement between you and the agent. When they go to represent you, there's a written agreement that says what they're going to do for you. It's a buyer brokerage agreement. And it lays out what Julianne is going to do for you. And that way, and so, just to give you an idea, in Georgia, that's how seriously it's taken. It's actually a document that's part of the real estate forms set so that you will know exactly what she's going to do for you. And the other thing that you got to realize is you don't pay the real estate agent. The seller pays the real estate agent. It's not costing you anything for Julianne to represent you. So since it's not costing anything, it's definitely money well spent. And it's already built into the purchase price of the house. So when you go to look at a house, a seller has signed a contract with the agent that's listing their house, and it spells out the commission that's going to be paid to them and the commission that's going to be paid to the buyer's agent. So this is not something that you have to deal with. So you definitely, another reason why you would want to have Julianne as your agent. And
just as another point of that is because it's already negotiated. For people that think, well, I'm going to save money by not using a buyer's agent, not so. They've already signed a contract. So somebody's getting that payment. It just you won't have anything to do with it. So just know that.
Yep. And finally, the last thing I think is probably, there's one aspect that I left out of this is the negotiation. Y'all, I'm telling you, I have done loans many times for people who did not use a real estate agent, and everything went fine until it didn't. And when it didn't, and there was no real estate agent to step in and be the advocate for the buyer, it can get real ugly and real confusing real fast.
And that's my favorite part.
Well, that's
the negotiation piece.
Yeah, and this is why you've got to have somebody that's good at it, because see, here's the thing. You as a buyer do not want to be talking to Mr. and Mrs. homeowner who have two of the sweetest little children and they're having a difficult circumstance and you really feel sorry for him. I'm telling you guys, you don't want to be in that situation. You want to have a realtor who can be objective and can advocate for you. That's why you need a real estate agent. Then the other thing, you can get advice on the state of the home. Julianne's going to see things in the house that you may not see. She's going to ask questions that you wouldn't have thought to ask. She's going to connect you with a couple of good home inspectors that you will choose who does the inspection on the house. And then she's going to help you work through the inspection to see what items are serious and need to be addressed or what items are just normal. And then she's going to help you as you make an offer on the house. You may go to a house and Julianne comes back and says, it's a great house, but I've looked at the comparable sales in the neighborhood and it's a little bit overpriced. I would suggest we make an offer at this price. That's something that you're not going to know as the home buyer. Very important. Multiple reasons that you need to use a good real estate agent. Now, here's a few things on the lending side. And I'm going to have time for you guys to ask me questions in a little bit. And I don't want to belabor all this, but here's some things that you should not do during the process. Number one, once I've pulled your credit, once I have figured out the details, I love that second one. Look at that, withdrawals. I think that was supposed to be withdrawals, don't y'all think? Don't make any large purchases because that's going to affect your credit. I have personally, thank God, I have never had somebody make a purchase that actually kept them from being able to qualify for a house. I have had somebody purchase a car and it scared us to death. But once we got the paperwork in and we found out what the new payment was, the numbers still worked. But it is something you don't want to do. If you
I
have
had
to
someone that actually had applied for a new credit card, and it totally threw all the balances off. And at the closing table, they had to rerun all the numbers again. And we sat there for 2.5 hours waiting to make sure that they could get approved.
Well, I'll tell you the worst one I've heard, Julianne, it was not mine, was the home buyer came walking into the closing attorney's office and saw the real estate agent and shook hand. Said, "Hey man, we got a few minutes before closing. Let me show you my new boat."
Oh, no.
New boat and new pickup in the parking lot. And of course, the lender probably had to go excuse themselves for a few minutes, but it did. It totally, everything had to go on hold for a couple of days, and they had to get a gift from a relative to pay off some other things and that sort of stuff. So that's just not the world you want to live in.
Wow.
So I would encourage you, don't go make any new purchases until the process. I love it when I have a client text me or email me or call me and say, "Hey, Reid, listen, I need to go do so-and-so. You know, we got to replace my wife's car. I didn't want to do anything until I talked to you." And I'm like, man, that is exactly the way to handle it. So I want to encourage you guys to do that. Large deposits.
And we're talking about things like even furniture for the house or appliances for the house. Don't buy all of that. You can be looking and searching, but wait to purchase anything until after we're closed.
Right. Large deposits that are not payroll deposits have to be sourced. So if you have, you know, your granddaddy slid you a couple $1,000s in cash, don't just hold on to it and don't deposit it until we get through. Any of the money that's used for the transaction, we have to be able to document the source of it. So we're going to have 2 months bank statements. And if there's a large deposit on those bank statements that's not your payroll, we have to document where it came from. And if it's cash, we can't document it. So just be aware of that. Sometimes I've had people that, you know, maybe they did get a large cash deposit. And so I say, you know what? It's already in your bank account. There's nothing we can do about it. Why don't we wait until I have 2 bank statements that don't show that deposit? Because at that point, we don't have to show the source of it. So just so you'll know, any large deposits that are not part of your payroll, we have to document the source of it.
Can I say something really funny right now?
You always do.
Back before 2008, when I was processing, I had someone, a loan officer, literally photocopy cash because it was part of their deposit. And the underwriter said she would take it, but she wanted to verify that all of the numbers on the money was not the same. So we literally had to photocopy the cash. That was before 2008. It was awful.
I was going to say, I don't think that could go down these days.
It was like $2,000.
Wow. That's crazy.
Yeah, that is wild. There's some funny stories and there's some horror stories out there. Disputes on a credit report. So back in the day, probably back in Jennifer's day, there was people would go, and if they had crappy credit, they would go and dispute everything that was bad. And so what happens is once you dispute an item on a credit report, it's pulled out of the score. It's not part of your score anymore. So theoretically, you could dispute all the bad stuff and your credit score goes up. Well, lenders figured that out pretty quickly. So now, in general, you can't close on a mortgage with a disputed account on your credit report. That's not a hard and fast rule. There are some circumstances, if it's old enough, if it had a zero balance, it's not an issue. But don't dispute things on your credit report right now. The best thing to do is to get with me. Let's pull your credit report. Let's go over it. And if it needs work, let's make a plan. but don't go and dispute items in the credit report because it's very likely the dispute's going to have to be removed anyway. The fourth thing is don't have multiple stores or banks pull your credit. One of the places where this happens the most is car purchases, because I've seen folks go and they had to buy a new car, and when we pulled their credit, there were 6 or 7 credit inquiries from banks on the same day. And so that's not really where you want to be. I would say, for example, if you do need to buy a car, go get your, maybe if you have a favorite credit union that's got a great interest rate for car loans, go there and have it and get your financing lined up. Don't necessarily go to the dealer because they're going to send it to a bunch of different credit vendors, and you have a bunch of different credit pulls, and credit inquiries on your credit report do affect your score.
Hey, Reid,
Yes.
if you get a lot of things in the mail that say, hey, go ahead and congratulations, you're approved for this much credit and you didn't ask for it. Does that affect, do they pull on your credit for that kind of thing?
They will if you call them, but they don't. I mean, there's some way that there's some soft pulls that can be done behind the scenes where your current creditors, can do a soft pull to see how your credit looks, and they can extend your credit line, which doesn't seem legitimate to me. But a lot of the stuff you get in the mail is just totally bogus.
It's just phishing, and it doesn't. Yeah. Okay, I just wanted to make sure because
Your credit's not supposed to be pulled without your permission ever. So there are some common misconceptions. None of you in this room may have these misconceptions, but it is out there because back in the day, and actually when I started in lending, I took my first mortgage application. This is going to freak you guys out. In 1987, I worked for a savings and loan association. I was very young at the time. But back then, for the most part, most of the loans we did, people had 20% down payments. That is not the case now. You do not need 20% down. I would say that the vast majority of loans that we do, people do not have 20% down. There are loans where you can have 0% down, but there are few and far between. That's a VA loan or a USDA loan. If you're not a veteran or you're not buying in a rural area, then you can generally buy with either 3 or 3.5% down. Now, here's why people say, well, Clark Howard or Dave Ramsey say that I need to wait until I have at least 20% to put down. I think that is great in theory, but the numbers don't add up. And let me tell you why. How long would it take the average person, if they're going to buy a $200,000 house, to save up a $40,000 down payment? How many years would that take? Let's say it takes them, my goodness, 6, 7 years, I don't know, at least, right? Well, what happens to the price of houses in 6 to 8 years? They're up. So it's like you're trying to hit a moving target. The other thing is, what the interest rates are right now. I promise you, I got my fingers crossed because it could be wrong. Interest rates are not going to be in the 3s or 2s in some cases like they are right now, 5, 6, 7 years from now.
I don't think so. No.
Yeah, historically, they say that a 6% is the average 30-year fixed interest rate. My first house, when I bought it, was at 8.5%. I have friends who are older than me who bought houses when fixed interest rates were in 14%. Now,
I bought it 18%.
So right now you're looking at
my first house is 18%.
That's crazy. And people still bought houses.
Yes, they did. And it was a balloon payment and I ended up losing the house. So yeah, that was back in the day.
Yeah. So right now interest rates are in the 2s and 3s. So it is a wonderful time to buy. And I don't think that it's necessary and even prudent in most cases to wait until you have 20% down. Another misconception is I have to have an 800 credit score. Well, that's not true. You don't even have to have a 700 credit score. You can actually, with our company, you can have a 600 credit score. We can do FHA and VA loans down to 600 credit score. Now, sometimes whatever major score be that low might be a factor, but the score itself down to a 600 does work for financing. And thirdly, renting is less expensive because the owner pays for upkeep. It is conceivable that you might be able to have a lower monthly rental, but right now rents are still high. And for the price that you can buy a house that's big enough for a family, almost always you can have a mortgage payment that would be the same or less. I have many clients right now, as part of the loan application process, I'll ask them, how much are you paying in rent? And when they tell me, I mean, my first comment is, oh my goodness, this is like you getting a raise. Your mortgage payment is going to be $200 less than you're paying in rent right now, and that sort of thing. So, and it's not always cheaper to rent. So I already ran through most of this. Why should you get pre-approved? Because if you're in a multiple offer situation, Julianne, let me ask you a question. What percentage of offers now are being made in a multiple offer situation? And what is a multiple offer situation?
Multiple offer situation is when more than one person is turned in a purchase and sale offer on a property. And in my situation right now, it's about 95% of the time it's a multiple offer situation at all price points.
Yeah. And if you're going to buy a $3 million house, you might not be multiple offers, but
Right,
there's not too many. But there's not too many people that are doing that.
Even into the 500,000 and 600,000, we're seeing
Yes.
multiple offers.
Yep.
And in some instances, in most instances, excuse me, if it's priced right and it's staged well, houses are going for 100% of their list price or higher.
Yeah.
It's a crazy fun time. And that might scare some of you. At the same time, you need to understand that compared to a year ago, your buying power is $32,000 stronger than it was a year ago. So you can buy $32,000 bigger home, more house than you could a year ago, thanks to the interest rates. That's why there's so many people out there still looking, because they know they can get so much more house.
Yep. As for the second factor on this, the reality is a good real estate agent really is not going to want to show you houses if you hadn't gotten a pre-approval.
I would thank you, Reid, for saying that, because I do not open a door for anybody until we know that they are pre-approved. I mean, that's just the bottom line. No one's going to take an offer on a property of someone that has not been pre-approved. And it would be a waste of your time and my time. So we definitely need to make sure that we've got that under wraps.
Yeah. The other factors that I've already talked about, to know what purchase price is in your range, and to know that when you put an offer that you will be able to get the loan. A couple of little things that I want to mention to you. PMI, some of you may know what that is, some of you may not. It's private mortgage insurance. Somewhere back in the annals of history, someone determined that if a person borrowed more than 80% of the value of a house or the price of a house, that was particularly risky. So if you borrow more than 80% of the price of the house, in general, you're going to have private mortgage insurance of some type. It can be monthly, where you pay a monthly mortgage insurance. It can be a single premium that you pay all at one time. There's different ways to take care of that. So that's when you hear the word PMI, just know that unless you have 20% down, you're going to have PMI of some type. A good loan officer is going to explain the options to you and let you decide what's best for you. LTV, we try not to use acronyms too much when we're talking to you guys, because I don't want you to be confused. The loan to value ratio. So that would be the price of the house, the amount of your loan compared to the price of the house. So if you put 20% down, your loan to value ratio is 80%. If you put 5% down, your loan to value ratio is 95%. And then your debt to income ratio. And there's two ratios we're going to look at. Number one is your gross income, gross monthly income, that's before taxes, as compared to the mortgage payment that you're looking at. And then we're also going to look at your gross monthly income as compared to all of your monthly payments. the mortgage payment, your car payment, your student loan payment, your credit card payment, etc. So those are the types of things we look at. And then these are some of the different types of loans that are out there. I'll touch on them very, very briefly. FHA loans, or excuse me, conventional loans, we can do these. These are folks with a little bit stronger credit, and you can do these with as little as 3% down. FHA loans, you have to have 3% down. This actually is incorrect where I said you can have a 580 credit score. You have to have at least a 600. FHA will allow for a lower credit score and you to have a little more debt, a higher debt to income ratio. VA loans, those are for qualified veterans. In my mind, that's the best loan there is. 100% financing, no PMI, great loan. Right now, 100% financing, that's pretty much gone. I think it'll probably come back. It departed the premises about in March or so. That went away. Jumbo loans, those are loans where you're borrowing more than $514,000. I doubt too many of us in the first time home buyer seminar are probably going to be buying in that range. And I won't hit the other ones. Those are things that we may or may not deal with, except for I will talk about the home ready. If that has income limits, but if you meet the income limits with 3% down, this loan is a little bit less expensive than some of the other types. Any questions on any of those? Anybody want any particular info?
How do we know whether we qualify for that Home Ready program?
That is something you have to be specific with your loan officer about. So what we would do is we calculate the income and then we look at where the home is. It's also geographically located because each area has an income limit. And then we make sure that the person's income is meets the guideline for the particular area they want to buy in.
Mm-hmm.
Yeah.
What about down payment assistance? Are those programs still available?
There are, yes, but not as many as there were. The one I primarily deal with would be Georgia Dream. Georgia Dream is a down payment assistance program. It has 4 different elements to it. The one that is the best is the one that deals with people in the medical profession, law enforcement officers, firefighters, and people like that. There's a $7,500
right?
down.
Don't teachers qualify for that?
And teachers, yeah, educators. Thank you.
Mm-hmm.
That's a $7,500 down payment assistance program, and that one actually is very helpful, and it usually does make sense. But we're really careful on that program, Georgia Dream, because the guidelines are very particular. So we'll do a lot of front end work to make sure that you really qualify for that before we give you the pre-approval letter and you go out and to use that program.
Okay.
Any other questions? Julianne, anything?
Well, one thing you may be wondering is in a market like this, when things are so crazy and there's so many buyers and not as many houses, how do we know that our offer is going to be accepted over others? Is anybody wondering that? Just out of curiosity. There's several things that we can do. Depending on the situation, the first important thing is to sit down with Reid or your lender and identify exactly where you're at and what we need to do. Do we need to ask for a payment on closing costs? So there's a couple of things that you need to be prepared and ready for. When we get ready to find your house, first of all, you're going to have to put down earnest money. And earnest money is like a down payment or a layaway plan on your house. The earnest money is typically 1% or more of the sales price, and that is applied towards your down payment at the end. So it's not extra money, it's just money up front that is held for you for that down payment. So that money needs to be there at least 1%. Then you're going to have your inspections and your appraisal, which you need to pay out of pocket before closing. And that typically runs about $1,000 total. And then not only do you need your down payment, if you're not in down payment assistance, so that would be 3 or 3.5% of the sales price. And then you're going to need your closing costs. And closing costs run and Reid, help me out here, anywhere from 3 to 6% of the sales price? And why does it vary so much?
Well, the rule of thumb most people use is they say 3%. Excuse me. It can go high. It can be a higher percent of a smaller loan. So most of the closing costs on a mortgage are fixed costs. The attorney's fee is going to be the same whether you're buying a $100,000 house or a $500,000 house. So that even though the number, so since the number is the same, it's a different percentage of your purchase price. So that's why it varies. It varies based on the amount of money that you're borrowing and the purchase price of the house. In general, I would say on a $250,000, $275,000 transaction, you'd be at about 3%. Higher than that, the percentage starts coming down a little. Lower than that, you know, if you get down to 150, something like that, you're going to see it as a higher percentage. The closing costs will be a higher percentage.
And we're saying all of that for you to understand the approximate amount that you're going to need. So for example, on a $200,000 house, if you were putting down 3%, that would be, hello,
6,000.
Thank you, 6,000. You need about $1,000 in, so your down payment would be about 6,000, which 2,000 of it you need up front. You need about $1,000 for your inspections and your appraisal. And then you're gonna need about $6,000 for your closing costs. So I'm telling you all of this so that you have an idea of how much money you're gonna need, example, up front. And then what we do is we work backwards from that and say, okay, I don't have all of that. Can we ask for closing costs from the seller? And that's part of the whole negotiation piece. This is a puzzle. And that's why you need a good agent and a good lender that can help you with this puzzle to make sure that it's working best for you and that we can offer a great offer on a property so that we get chosen. So it's a dance. It's definitely a dance that depends on every situation. Does that make sense to everybody? Cool.
Yeah, and
what other
questions? One thing to think
ahead.
about too, you know, some of you may be thinking, well, the seller doesn't want to pay some of my closing costs. Well, I want to tell you that probably 95% of the transactions in our market, the seller is paying some of the closing costs for the borrower. So just if that popped in your head, take that thought out. It is very, very common.
And there are ways that we can also adjust the sales price so that we're including some closing costs. So it shows that the seller's paying, but we're actually kind of adding it in, again, depending on whether it's going to appraise. That's, again, why you need a good agent that understands the market and knows what things can appraise at so that you're able to get a good offer in there that's attractive to everybody. And it's a win-win. Okay? What other questions do you have? I know your minds must be reeling right now. Oh, that's not what I wanted to do.
Well, I'll put some contact information up there. So if anybody needs to call me or email me, there's my info.
Awesome.
Would love to help. Just any way I can help, just to be a resource for you. Even if you have your cousin's brother who is going to do your mortgage for you, and you have questions, I'll be happy to be a resource for you and answer any questions that I can help with.
You bet. Thank you very much, Reid. So as we wrap up our homebuyer seminar, here's our next steps, ladies and gentlemen. First of all, we do need to get you talking to a lender, whether it's Reid or somebody else, and get you pre-approved. We also need to go ahead and schedule a time for us to sit down and one-on-one and really get a really good idea of exactly what you want, what you need, and narrow the focus down so that we have a very clear picture of what that looks like. So if you'll go ahead and tell me some times that'll be available, we'll go ahead and block that in today. Okay? All right, so I'm gonna take us off script now. So now as agents, give me some feedback or some questions. What's going through your mind?
Do you make them register for this call in any way in order to get their information, or?
Good point. Yes, I would have, because since it's a Zoom call, you've got to send them a link. So I would definitely have had them register.
Okay.
And you can set that up on a landing page where you can have them register for it, and then you can send them the link.
Okay.
Okay. What else?
And good job, by the way.
Sorry, what?
I said, and good job, by the way.
Ah, thank you. Thank you. I like to make sure. Oh yeah, go ahead, Janice.
For self-employed individuals, how would that process work as opposed to somebody who has a steady income?
Good question. Reid?
The first thing we're going to do, Janice, is I'm going to get their tax returns for the last 2 years and calculate the qualifying income, because 9 times out of 10, what they think their income is not the qualifying income for their mortgage. So that's sometimes if they've been in business for more than 5 years, we can get by with 1 year's tax return. But in general, up front, I'm going to ask for 2 years, and we're going to calculate the income. Fannie Mae has very specific worksheets for calculating self-employed income.
And individuals that are not U.S. citizens that don't have a Social Security number, are they able to purchase at this time or no?
I don't have any programs for them. I am told that there are some lenders that have those programs. I think that number has shrunk dramatically since March. I get calls periodically. I've got a couple of calls this week where agents, the person that they used before for people without a Social Security number, they're not doing them anymore. So
Yeah.
it's difficult.
Yep, and foreign investors is almost nil just because the embassies aren't open for notarizing. So we have some challenges right now. Let's face it, we do. What else as far as seminars? So is this something that you feel like you could do?
Sure.
Is there any reason why you couldn't?
I mean, the inspector made it seem. Hold on.
Nidra? Oh, she's.
Sorry
Go ahead.
about that.
That's okay. Oh, she keeps cutting in and out. Nidra, are you there?
I didn't mean to say anything. I apologize.
No, that's okay.
I got some stuff
All right.
going on.
I know she's in the middle of a home inspection right now, so that's
Hi,
probably.
hi, Julianne. This is Grace.
Hey, Grace.
So, hi. So roughly, what's a good time period to start sort of promoting it before you actually do the event? So, like a month to start planning it, or less?
I would say 2 weeks. I mean, you really don't need that much time. If you're promoting it well on social media and you're blasting it out to your friends and family, you could do it, even a couple of days. It just depends on how many you want on. Do you want it to be more intimate and just a couple people, or do you want it to be a huge group? I would prefer it be this is a perfect size because I could monitor and, check out and see how you guys are doing. I'm not sure I would want a huge group. So it's really up to you as how big you would want it.
Okay, thank you.
But I think you could easily do it a couple weeks in advance, as long as you're definitely advertising it daily on social media and really blasting it with a registration. You also are going to need to remind them about it, that like the day before, the day of. So you really have to have your social media and your execution, your process down in place in order to make sure that you get the hits that you're supposed to.
Okay.
Make sense?
Mm-hmm. Yeah. Thank you.
One other thing that I have done in the past in a home buying seminar that I didn't do today is I might give them kind of a brief overview of the selling process, with the different due diligence, the diligence periods, the due diligence, the financial contingencies, kind of a timeline for them on how long it could take. At a minimum, just to let them know that this could take a couple of weeks to maybe 45 days once we are under contract. That it could take a couple of weeks. It could take a day. It could take a couple months depending on the price point, just so that they have a better idea of the timeline of how long it's going to be. Okay. What else? So my suggestion is that you get some great referral partners like Reid, Kendra, anybody in our office who can sit down and do a home buyer seminar with you. I mean, that's one of the things that they love to do. I know everybody's super busy right now, right, Reid? And at the same time, you want to make sure that they always find a way to make some time. Yeah, they do. They make time in order for you to do this.
Yeah, we're working some long hours these days.
Absolutely, as we all are, right?
Mm-hmm.
As we all are. All right, if there are no further questions, I bless you and say go out and have a great time doing these home buyer seminars, because you can get some great business from it. And Lamar, my email is Julianne@soldbyjulianne.com. Okay.
All right, guys. Thanks, everybody.
Bye. Thank
Bye.
you.
Thank you.
Thanks.